Hello all the lovely audience, welcome back to my channel again. I hope that you are very fine. I am as well as. So today I am going to talk about very important topic. So our today's topic is investing on a stock market. I hope and I wish that you are very familiar with this term and also with this topic. Now I am going to explain more vastly about this. So at first we need to know what is a stock market. This is the basic terms, okay? So the stock markets refers to public markets that exist for issuing, buying and selling stocks that trade on a stock exchange or over the counter. Stocks, also known as equities, represent fractional ownership in a company. And the stock market is a place where investors can buy and sell ownership of such investable assets. An efficiently functioning stock market is considered critical to economic development as it gives companies that ability to quick access capital from the public. So purpose of the stock market: capital and investment income. The stock market serves two very important purposes. The first, to provide capital to companies that they can use to fund and expand their businesses. If a company issues 1 million shares of stock that initially sell $10 a share, then last provide the company with a 10 million of capital that can use a gross to its business. Now the another point is, how does the stock market work? The stock markets provide a venue where companies are raise capital by selling shares of stock or equity to investors. Stock gives shareholders voting rights as well as a residual claim on corporate earnings in the form of capital gains and dividends. Individual and institutional investors come together on a stock exchange to buy and sell shares in a public market. When you buy a share of a stock on the stock market, you are not buying it from the company, you are buying it from an existing shareholder. What happens when you will sell a stock? You do not sell your shares back to the company, but instead sell them to another investors on the exchange. So now I am going to the our major part, investing on a stock market. So investing in a stock market. At first, how to invest in stocks, a beginner's guide. Investing, a time tested way of putting your money to work for you as you work to earn more of it. Legendary investor Warren Buffett defined investing as a foregoing consumption now in order to have the ability to consume more at a later date. This point is very important for investing term. By investing your money regularly, you may be able to increase it many times over with time. That's why it's important to begin investing as early as possible and as soon as you have some money saved for the purpose. Furthermore, the stock market is a good place to start. Whether you have $1,000 set aside or can manage only an extra $25 a week, you can get started. Bear in mind that there are a lot you can should learn about investing in stocks to achieve financial successes. However, right now read on the steps to begin the process. Number one is investing is the act of committing money or capital to the endeavor is the exceptional of obtaining additional income or profit. Number two, unlike consuming, investing puts money to work so it can grow over time. Number three, however, investing also comes with the risk of losses. So, steps to get started. Define your tolerance for risk. What's your tolerance risk? Stocks are categorized in various ways such as large capitalization stocks, small capitalization stocks, aggressive growth stocks and value stocks. They all have different levels of risk. Once you determine your risk tolerance, you can set your investment size on the stock that complement it. Number two, decide on your investment goals. You should also determine your investment goals when opening brokerage account, and online brokers such as Two Brokers will ask you about your investment goals. For an example, if you are just beginning your career, an investment goal could be increase the amount of money in your account. Number two, your investment goals might include buying a house, finding your retirement. Number three, determine your investing style. Some investors want to take an active hand in managing their investments, while others prefer to set it and forget it. Your preference may change, but decide on the approach to get started. Number one, if you are confident about your investing knowledge and capability, you could manage your investing and portfolio on your own. Number two, an experienced broker or financial advisor can help you to make your investment decisions. Number three, a robo-advisor is an automated hands-off option that typically costs less than working with a broker or financial advisor. Once a robo-advisor program has your goals, risk tolerance level and other details, it automatically invests to you. Number 4 point is choose your investment account. Retirement plan at work, you can invest in various stock and bond mutual funds. Targeted their fund through a retirement plan at work, such as if your employer offers one, it may also offer the option of investing the employee's company's stock. Once you enroll in your plan, contributions are automatically at a level you set. Employees may make matching contributions on your behalf. Your contributors are tax deductible and your account balance grow tax terrified. This is a great way to maximize your taxing dollars with little effort. Learn to diversify and reduce risk. Diversification is an important investment concept to understand. In a nutshell, by investing in a large of assets or diversifying, you reduce the risk that one investment performance can severely hurt the return of the overall. Minimum to open an account. Many financial institutions have minimum deposit requirements. In other words, they won't accept your account application unless you deposit a certain amount of the money. I was remembered when I was open a bank account. That time I need to pay $500 to open a bank account. Okay, so the cost to invest in a stock, commissions and fees. As economically like to say, there is no fee lunch. All brokers have to make money from the customers a way or another. Mutual fund loans. Mutual funds are professionally managed pools of investors, funds that focus their investments in different markets. They have various fields that you should be aware of. One of these management expense ratio, MER. The MER is the paid by shareholders of a mutual fund and goes toward the expenses of a running fund. Then online brokers, discount brokers, full service brokers and robo advisors. Just lot of topic, stock market simulators. What is the difference of full service and a discount broker? What are the risk of investing? I will definitely explain these terms in my next video. So my dear audience, thanks for watching this video. Our today's topic is investing on share market. I hope and I wish that you liked my videos. Thank you so much. Just do subscribe on my channel. See you again with a new video, with a new topic in another day. Okay, take care of yourself.